Hello, everyone. Welcome to another segment of my audio video short recording and on a specific topic on credit repair. The name of this particular topic is Top 10 Misconceptions of Credit. My name is Si-Wing Yi. I'm the credit consultant located in Fremont, California. My company name is Integrated Financial Solutions. I've been doing credit repair very successfully for the past 20 years, and I help tens of thousands of consumers to restore their credit so they can achieve their financial freedom through purchase of real estate and other credit-related matters. My phone number is 510-552-0726, and my email is siwingyi@integratedfinancialsolutions.com. Again, thank you for listening to this audio recording as well as the PowerPoint presentation. Okay, so let's without further ado, let's proceed. Myth number 1: you share a credit score with your spouse. Not true. Although you may have obtained a credit obligation with on a joint account, however, your credit score is under your name, your social security number, your date of birth, and information on your credit history. So if you and your spouse obtain credit jointly, then your other spouse, him or her, credit information are separately reported on his or her credit report. Totally separate entity. Okay, whether you obtain credit using a single owner or joint account or whatever, everybody have their own unique individual credit profile. Myth number 2: your credit score only counts when you're looking to borrow money. Well, your credit score counts in anything you do, not just looking to borrow money. It is stored in a repository in a computer under the credit reporting file out there somewhere. So it counts in multiple ways, not just looking to borrow money. It just applies to a job application. People look at your FICO score, your credit score. Applies to a car loan, mortgage loan, looking to borrow money or leveraging your credit. It's just used in multiple areas. Okay, so myth number 3: always pay your credit card balance in full, and that will give you the best credit. Well, not necessarily. Sometimes as long as your debt ratio is 25% from the credit limit, it's okay to carry an ongoing balance. For example, if you have a credit card limit of 10,000, if your credit card balance is around $2,500 balance on any particular month, that would be 25% ratio. So that's good. So it'd be nice to get lower than $2,500 per month, right? On 25% ratio, you can do $1,000 per month balance, or even zero balance on an ongoing basis. Pay it off in full every single month and charge it up again, or pay it off in full. That's good too, right? So not necessarily you must pay it off in full in order to have the best credit on your credit card balance, right? So that's myth number 3. Myth number 4: my mortgage broker can use the credit report I obtained from annualcreditreport.com. Your mortgage broker obtained their report on a factual data report. They pull it from their own mortgage report they have in place on the computer. So they use those tri-merge mortgage credit report where they combine Experian, Equifax, and TransUnion. As a matter of fact, the score that they use are slightly different than the more traditional FICO score that the credit bureau will provide. So different kind of credit reporting modules are available out there. So you have to be careful to not to misinterpret a particular credit score coming from from a particular source. In this particular case, a mortgage lender, which can varies in the score interpretation. Okay. Myth number 5: too many accounts will hurt. You must close accounts. Now, that's a big myth. If you close account or even too many accounts, you will no longer have a ongoing monthly payment history, and that will hurt your credit score. Okay, if you have too many accounts, do not necessarily close them, but again, manage it correctly. Spread out the balance due among those credit card accounts. Have a relatively low balance on each account, each credit card account. Pay it off on time, of course, and then try to increase the credit limit. The higher the credit limit, the lower the balance with respect to each of those trade lines, credit accounts, would really gonna help you a lot. All right. Myth number 6: a co-signer is not responsible. A co-signer is responsible. Yeah, they are responsible. Okay, so be careful if somebody going to do a co-signing. The other party should be responsible. In fact, do your best to stay away from it, because the other party, if the other party default, you may or may not know about it, right? And it'll your as a co-signer, your credit is being impacted on any delinquent obligation that may arise on the account. All right, so be very careful about again, all else being equal, do not do co-signing unless you absolutely have to, and the other party needs to be as responsible as possible. Okay, but because whatever happened with them, it will come back on your credit report as well. Myth number 7: if a judge in a divorce proceeding orders a spouse to pay a debt, it's no longer affected by on your credit report. That's false. Okay, if initially you and your spouse obtained credit jointly while you were married, both of you are obligated to pay off that obligation contractually. See, if a divorce after divorce, even if a judge will order one spouse to pay off the debt, if the one spouse does not, for some reason, pay off the debt, your credit will be affected, because initially you obtained the credit on a joint basis, right? You're still liable. Myth number 8: multiple auto inquiries will hurt your credit score for each one. Well, it all depends. Multiple auto inquiries, if you obtain those inquiries excessively, then it's gonna hurt you. Like if you in a one weekend you will shop for 10 lenders, try to get the best rate, whatever, or over the next 30 to 45 days, you'll keep on trying to apply for credit loan applications. That's gonna hurt. But if you judiciously just request for inquiry in less than 30 days, like 3, 4, 5 inquiry for auto loan, that should not affect you that much. Okay, on the inquiries. So that's myth number 8. Myth number 9: a serious financial crisis like a foreclosure or a bankruptcy will permanently hurt your credit score. That is not true. Okay, I mean, nothing is permanent, really. Okay, contrary to what you've been hearing. Although a foreclosure or a bankruptcy will, on a short term, will hurt you greatly, like a reduction of 50 to 75 points, FICO score point, if you will. Over time, even if you do nothing about it, over time, the credit score will systematically, gradually go up. Better yet, if you contest it in a manner that we've been, that's what we do as a credit repair company. If you dispute with the credit bureau and get deleted in advance, you can really bring up your FICO score quite quickly in the next few years. So although, like I said, myth number 9 is it's gonna hurt, but it's not permanent. It's just there's a lot of things you can do about it. All right, to restore your credit in advance of the 7 to 10 year credit reporting statute of limitation, which is very, very devious, if you ask me. And finally, myth number 10: FICO scores are locked in for 6 months, and that they change every 6 months. Not true. FICO score is ongoing. Every single minute is like it never sleeps, because your credit report whether you have credit card accounts, mortgages, or car loans, gets updated by the computer, okay, by the consumer reporting agency, Experian, Equifax, and TransUnion on every second, right? When you pay off an account on one particular month, your creditor will update the information to the credit bureau to update that you paid off the balance due from, for example, $50 on the previous month to zero balance. So the next reporting cycle that a particular creditor updated credit bureau will change your credit rating, your FICO score, instantaneously. So you have basically you have 10, 15, 20 accounts. Some are installment loans, some are revolving debt, some are mortgages, some are car loans, whatever. It just get updated to the credit bureau on a monthly reporting basis. The computer keep on updating things. So your FICO score changes every second, all right, every day. It doesn't, So this is unique aspects of the mystery of FICO score, which I will detail you in more on future topics as well. Okay, so again, that's all I have for this short, quick audio video presentation. And again, for more information, please contact me, Si-Wing Yi, the credit consultant. My number is 510-552-0726, and you see my email, siwingyi@integratedfinancialsolutions.com, and my website, www.integratedfinancialsolutions.com, and contact me. I can go over your personal situation, give you some additional value with respect to how to analyze your credit report, how to the techniques involved, procedures involved to improve your FICO score so you could leverage your credit to achieve your financial freedom. Thank you so much for your time to listen to my audio. Hopefully you receive a lot of value from this. And thank you, good luck, and talk to you soon. Bye now.